Joining us in studio, Diana Avigdor, a VP and Portfolio Manager and the Head of Trading at Barometer Capital Management. We don't really see much of a market reaction to what's happening here at this juncture, but when the news hits your ticker tape, what happens on your trading floor?
When the news hit the ticker tape, you saw futures, Canadian futures, TSX futures, started driving themselves down on about 10% higher volume than normal is where we stand right now. But back around 11 o'clock this morning, the volume was about 40% higher if you calculated it, if it was going to end that way. So it tapered off now. I think people are waiting for the initial development of the story and getting more news. Nobody wants to overreact. We've seen markets and people overreact to bad situations or unfortunate situations that in hindsight you would have had to probably wait and do nothing as the story develops. So we're down about 2%. We had the DOEs as well today, which was oil negative, and so that's taken the TSX. So at the very least, people are not stepping in to buy. So if you had any buys, maybe you say, you know what, I'm just going to work them over the day, or maybe I will just put a limit on it, not kind of reach for your stocks, even if you like them. You know the market might get sloppy. So
the market gets sloppy as we sit in a holding pattern waiting for more information.
Right, and it becomes illiquid. And if I looked at, I ran volumes before I came to the studio, and it's down about 19% versus the 10-day. Now granted, the 10-day was pretty high because of the correction tantrum that we had. But even if we ran it a little larger, volumes are light. Speaking to the cash desks, block trading activity is lighter. Cash trading is lighter, and program trading is lighter. Usually what that means is, you know, if somebody wants to take Canada down, say 5% of their weight, but loves all their stocks, we generally, let's say 40 stocks, they'll take a little bit off everything, and then you have a TSX 60 program hit the tape, for example, and that takes the index down. But they're quiet as well. So in terms of volumes, we're 20% light. Futures are a little heavier.
It's difficult to look at past terrorist acts to get a sense as to where we go from here, because this doesn't seem to be on the magnitude or the scale of what we saw with, say, September 11th or in 2008 with Mumbai, or going even further back. But what is your sense as to that orderly move towards the exits, towards the end of a trading day in this environment?
I do not see any kind of reaction from today's news as what, for example, we've seen a week or two ago at the worst case that the stock market had their correction in terms of volumes and people saying from an investment perspective, or be it because of cash outflows, I think that leg was totally correction, cash flow oriented. We don't see that. We see quiet, we see sloppiness. Yes, there's no buyer stepping in, but we don't have massive selling coming on. Primarily also yesterday was a very good day from a technical perspective as to how it kind of held and rallied. So the unfortunate incident today, maybe we would have had a flat day today probably. It feels like we would have had a flat day.
We're looking at that two-day view on the TSX now that shows we're off the worst level of the trading session, but not by much, with a 180-point decline, 1.2% at 14,366. The Canadian dollar would be another thing to look at, would it not?
Well, the Canadian dollar had a big range today, but we had some news. We had Polos talking, and we had retail sales earlier today. And I think that has most of the 80 beep move is attributable to that.
Rafi Tamazian over at Canoe Financial had an interesting quote. I want to get your reaction to this. Again, as we now wait for the RCMP news conference, 9/11 had an immediate term, very concerning negative impact, but a medium term effect as well, because it clamped things down and created austerity and reduced demand for energy. So if this continues and we don't nip it in the bud, we, meaning Canadian energy, we are going to be in trouble. Is that raising an alarm bell a little too soon, or is this a reasonable concern for you?
Not yet. I'm not saying that this cannot develop into something more serious, but at this point, we've had an event that happened 3 hours ago. I guess if the news narrative over the next few days, weeks, comes out more and more negative, at some point you're going to start drawing some longer-term implications from what terrorism does to a nation and to demand and that sort of thing. But not as of yet. I wouldn't recommend people starting to shift their portfolio weights. I do want to bring forth to people's mind that risk appetite or risk tolerance is somewhat different than volatility tolerance. In other words, you could be perfectly fine with losing 10 or 20% on one of your stocks if you're diversified over a period of time that is reasonable. You may not want to be down 10% and up 10% and down 20%, that sort of thing. So from a volatility perspective, we might have increased volatility, and if you're not comfortable with that, it's a bit different than risk tolerance.
We're about a minute overdue for the RCMP to tell us what they know or what they can tell us they know. What do you need to hear from the Mounties to reassure you?
That we're looking into it, that we know what's going on, that we're in control, that we have security in place for this not to happen or that sort of thing, that we're capable. I don't think you can cut out terrorism. We've come in the world to a place where, unfortunately, this becomes a fact of life more than before. But security levels, savvy, knowledgeable security of our people and of our presidents and prime ministers and so forth, that would make me feel more comfortable.
We had an event on Monday, a soldier who was killed in what was clearly not a car accident, but the actions of an individual who was looking to target soldiers. Then we have that again today. There is no indication whatsoever that they are connected, that they had a relationship, the perpetrators of either of these events. Having said that, from the Stratfor individuals we've been speaking to and the others within the business intelligence community or the intelligence community have been telling us that homegrown attacks are much more difficult to assess and to prevent, and that this may just simply be a case of more people taking a cue from ISIS than direction from ISIS. If there is a third event in the near term, in the next few days, does this change our conversation?
Maybe, but I'll tell you what the silver lining I feel, and it's not really a silver lining, but here's the thing. When you know what you're faced with, and you become more careful, and you know what to do, it's better than when you're relaxed and naive and think that there's nothing going on, and then it hits you. If you asked me earlier, what would they have to say to make me feel more comfortable? They would have to say, we know what's going on, we have the intelligence, we know what to do, and then watch for it and know what to do. That would make a difference in our conversation, and it may make a difference in how this develops in our country going forward, because Canada is pretty benign from this perspective. This is new to us.
International lawyer Christiane Duhem had spoken to us earlier, and she had talked about the economic impact of these types of things around the world, not specifically here at home at this point. But she drew our attention to lessened consumer spending that often comes as a result of these types of events, airline industry issues as well. Would you look, if we do in fact find ourselves in a scenario where you and I are having this conversation again tomorrow, 3 days from now, a month from now, that you would need to look at those types of investments?
I think you do need to look at those types of investments for sure. I think, though, that you stick to discipline. So at Barometer, we buy good getting better, and we get rolled out of our positions based on certain stop losses. Should the market in certain positions start selling off, for sure we would get stopped out of our positions and our cash would grow. I don't recommend that you try and pick bottoms in situations where the volatility of your stocks is 5–10%. You will ask yourself if it's the bottom many, many times.
You touched on stop losses.
Yeah.
Give us a sense in this environment when so many of us would have computerized based stop losses versus what you and I have spoken about in the past, having a whiteboard with a dollar value on it saying if something that I own falls below that point, that's my sell point. Do you make changes to the way you adjust your stop loss levels in this environment?
It depends. It is dynamic because you're looking at relative strength. It makes a difference. So you have a portfolio of 40 stocks, let's say they're over 5 different sectors, and one of your sectors starts deteriorating more than others. Well, of course, generally speaking, some people will sell strength. We will sell our weaker ones first, and then it kind of rolls through the strength. And then, you know, in the beginning of the year, we had overweighted energy, and as energy lost momentum, we got taken out of some of our names, with the exception of a few. We were positive on the market, and we redeployed it into the U.S., where strength exhibited itself: healthcare, technology, so forth. At some point, when during the correction and before, and a little bit before, as things started deteriorating, some of the cash, some of the stop losses hit again. We did not redeploy that cash. So it's a matter of whether you're redeploying your cash or not. Maybe you get stopped out and you feel, this is too much volatility for me. This is not the environment. I'm going to sit back and wait, because it's not about making the maximum amount of money. It's not about picking the bottom. It's about making money at some point, and at a reasonable risk, and with a reasonable volatility. If you can't handle the volatility, and I'm not talking about risk tolerance, if you don't want the volatility, because it impacts your judgment, it impacts your emotion, it can get you out and in at the wrong time, maybe you want to sit out the volatility. At some point, though, we recommend that you follow the strength in the market, not the weakness.
Diana, as always, it's great getting your sober second thought on these issues. Thank you so much for joining us.
Thank you for inviting me.
Diana Avigdor, Portfolio Manager and Head of Trading at Barometer Capital Management.